50K portfolio results for this week so far on the month. We were in a $7,500 drawdown roughly last month. Made a comeback to equity peaks, and we haven't had a run at equity peaks since this time frame right here. So we're due for a scenario where we not just hit equity peaks. We don't want to just barely hit equity peaks and then pull back, hit equity peaks and pull back. We want to have runs at equity peaks. We haven't had a nice run at equity peaks in a while. So I think we are due for one, and we are also near a not a worst case drawdown, a drawdown alert. So in the 50K portfolio, I like this opportunity. We have 3 to 5K drawdown is our entry point for adding additional contracts or starting a portfolio, and you're at 2,500, so you can get in. These things happen quickly. So it could go into, Monday it could be down 2,000, it'd be a $4,500 drawdown, and Tuesday it could make a new equity peak. So that's just a potential scenario. I'm not saying that that's what's going to happen, but when you start a trading program, a trading system, or an investment, buying a dip into that equity curve is a good way to start. It can be a good way to start. Timing going in and out, that's tricky, but just starting out, if something moves up and it pulls back and it moves up and it pulls back and it moves up and it pulls back, you typically want to get in on the dips instead of the equity peaks. Now, every now and then it can hit an equity peak and just run. And so sometimes that happens. We've been hitting equity peaks and then pulling back, barely hitting equity peaks and pulling back, barely hitting equity peaks and pulling back. We haven't, done this lately. So we're due for one of those going into the end of the year. We'll see if we get that. Down 345 on the month after being up last month, down in August. This is the same set of strategies we've used all year since January 17th. And we made a change on January 17th to switch out night trader for gap continuation in reverse, and we haven't changed it. So this is a setup that's been used all year, up 29K on a 50K portfolio. Not bad. It's had some good years where it's been more profitable in 2018. It's been profitable in 2020. I mean, it's been profitable all these years when you look back at the historical back tests, but highly profitable, 70K and 80K, and we're more on pace with a 2019 this year. So, but we are at higher volatility levels, and we could come back to these in 2022. 2022 could come back to those levels, or we could get a huge gain at the end of the year. Look at what happened in 2018. We had a lot of volatility that year. The Cobras did well. Cobra and gap continuations. I don't know if you remember the end of 2018, there was that big sell-off. The Fed was going to taper, and then they reversed it at the end of 2018. And so big Q4 in 2018, decent Q4. I mean, not huge, but a decent Q4 in 2020, and then kind of a small gain in 2019. So we could get a small gain, or we could get a run, but you should look at this long term. It could be a good entry point here at this drawdown level. You could wait for a 5K drawdown. That could also happen quickly in 2 or 3 days, and then looking for a bounce back. And we also anticipate it could eventually make worst case drawdowns. So a lot of our portfolios made worst case drawdowns, and I'm actually looking at some changes for this setup, but I really like the opportunity of the 50K portfolio still. It's been our strongest performer. Other strong performers in this setup have been the stock indexes. I've updated the portfolio calculator through Friday. So stock index portfolio 27. Let's take a look at that setup. To save it sometimes for it to update. So here it is in a 2865 drawdown. Now we talked about how it was in this drawdown at the end of September. Let's look at the drawdown. And it was at this drawdown 1, 2, 3, 4, 5 trading days ago. I guess coming into this week, we were in a 12K drawdown. We were in a 12K drawdown at this time last week, and I said this could be a good portfolio. It's halfway into a worst case drawdown, which is a normal cyclical drawdown, and this one has held up, and it made a run this week, and so it made new equity peaks on Wednesday, and then gave some back on Thursday and Friday. So stock index portfolio and the 50K portfolio have been the strongest portfolios. The other portfolios have had a lot of commodity strategies, including gold, that have struggled. So trading gold has really hurt us in some of our other portfolios. I want to go over these drawdown curves, though, real quick in these, and then we'll look at the other portfolios. And let's see here. Trying to get this to go down without jumping down. So it held its worst case drawdown here. It did make this worst case drawdown back in February by a little bit. So you have to be prepared for worst case drawdowns and anticipation of a bounce back. And the strategies and some of the portfolios that we're trading now, those have been extended with gold. Let's look at the 200K portfolio that we were trading. We stopped on September 30th, and gold has really set us back. This continues to be, it was down 2 months in a row. It's up a little bit this month, but made another worst case drawdown, 5K from its worst case drawdown. So up on the year. So been trading it since January. If you go back and look historically at the transition of the 200K portfolio this year, it's up since January, but struggled recently with gold, and now I've added this additional feature. So you can see that if you remove gold, that drawdown goes from 48,000 to 32,000, and that has just been the real culprit. So there's been several gold strategies that have really caused that too. Not all the gold strategies, but we're paring back on gold, and we're looking at this beta 200K portfolio to start at the right time. It's in a $6,200 drawdown. That too could hit a quick drawdown point. If you're looking for a 10 to 15K drawdown, I would say 12K would be a good place to start. 10 to 15K drawdown or 12K, we are about $5,800 from that. That could happen in 1 to 3 days potentially. It may not happen for a while. It could go into a run-up from here. It could go straight into a 12K or more drawdown from here in the next 1 to 3 days. We're waiting for that 12K drawdown. When you see that 12K drawdown right there, the risk to worst case drawdown is lowered, and then we'll start at that point. And so this is beta, and I'm still doing research, so I might make a change between now and then because this is a beta setup, and I'm still doing market research that I'll reveal later on some other markets or some other strategies. And so let's take a look at the drawdown curve. For this one, we removed 11 strategies from the old 200K portfolio that we were trading September 9th through the 31st. 11 strategies, 6 of those were gold, and there's a 2 in crude oil and 1 from silver, 1 from soybeans, and 1 from NASDAQ. And here's how this one looks. And this one had a huge end of 2018. So if you look at this, huge gains at the end of 2018, big volatility, 93K at the end of 2018. It was up 28K at the end of 2019, and it was up 22K last year. So we'll see if we get a quick drawdown. Be great to get a quick drawdown, get in it, and then have a big end of the year performance on this setup. So that's what we're looking for. That's what we're taking a look at. And the other portfolios, similar analysis. I'm not going to go through all of those. You can do that on your side. You can download the portfolio calculator and do that. Keep in mind gold is the biggest culprit, and you can test it by removing certain market sectors or just different markets. If you want to remove all E-mini S&P strategies, you delete that. If you want to delete the NASDAQ, you delete that. Gold, you delete that. You can highlight and delete all the commodities as well. We've done that before, and you have that analysis available to you. That's the latest on the portfolios through October the 8th, 2021.